Good morning, everyone. Let's start with this new morning briefing. Today is February 27th. It's 10 a.m. in Italy. Let's take a moment. Let's do a quick recap of what happened yesterday, starting with the Nasdaq. At the opening, there was an attempt, as we had anticipated, towards the highs of yesterday's VIX zones. Then there was the pullback. So that's what happened with the data from NVIDIA. So the price is now above the BC3 levels. At this moment, from a broader perspective, if we look at the American indices are currently in a pullback phase. In my opinion, as I said, probably, a third wave. From these levels, a downward move could happen, which might bring prices likely close to the lows of the year. Yes, it is. Let's say that basically the situation is this: as long as we stayed in this range, which was also a bit due to the options expiration on Friday. So there were situations to monitor where the market makers were intervening little because they were interested in keeping the price within this range. After that, once the expiration passed, the market was free to move and gave this first bearish push, which was also a consequence of probably from yesterday's press conference with Trump, where tariffs were announced against Europe. Everything that was stated in his agenda is moving forward, and it has also been quite tough against Europe. We'll see how things develop. Europe's response for now has been verbal of reactions for these tariffs. What decisions will they make? Another aspect to consider, in my opinion, I'm giving a bit of an overview, of course. Then we'll look at the details. For the Russell, for example, it could envision, these are a good starting point, an increase and a relative strength recovery compared to indices like the Nasdaq and like the Standard. And why is that? In short, but small and medium-sized American companies are closely tied to the U.S. public debt. Musk, with his Department of Today, is intervening. In short, the outlook is for cuts. I think I read about 5 billion a day in cuts, which adds up to a huge amount of cuts in a year. And so this would obviously lead to a lower issuance of government bonds and consequently a drop in government bond yields. And this would obviously benefit small American companies that are heavily in debt. So a drop in rates would definitely help them. In short, they would definitely find it useful. So we'll see the developments from this point of view. As for Europe, the macro data continues to be mixed with what may seem like the reality, because they continue to be. The macro data coming from Europe is quite good, although in reality, frankly, being European and Italian, we live in a reality that is anything but, and in short, reflected. From the macro data, okay, but let's move on to trading and take a little look. The Nasdaq, there are data at 2:30 p.m. about GDP, and then there's the usual data on weekly unemployment claims, the JOLT. We'll see, in short, how these data will be and how the market interprets them. At the moment, the Nasdaq has recovered. It has done. This spike in volatility during the night with the release of NVIDIA's data. But all in all, we're more or less in line with where we were yesterday, just before the data. So at the close, around 10. We stayed there. Then there was this recovery, which frankly still seems to me to be quite stagnant and not supported by volumes, as we mentioned yesterday. So I mentioned that yesterday as well. So I expect, as I said before, a probable third bearish wave, a reversal for the American markets. I see that as the most likely scenario, but of course, we need to stick to what we have in front of us. Right now, we're working above the red one. So a likely attack on the red one, which somewhat corresponds to the area of yesterday's highs. From here, we can definitely go for a retest of the opening range area, so between RD0 and SDO. Then we'll see what to do next, and that will depend a lot, of course, on the data that will be released before the opening. So we'll see what to do next. Let's take a look at the standard of the pool. In short, the situation is similar, or even better, because we are already very close to it. Of Ordo at this moment, so it looks like a good recovery. This spot is from the standard, and even though, well, this is a chart with volume candles, so from here we can already understand where they are. Of course, there are the volumes, and this is what actually happened. So after the data of NVIDIA's quarterly results, and so we see that there was a moment with volumes, but the volumes aren't supporting it. We can also see from the KPV indicator that it tells us that yes, they were definitely supported as a result of this. Here it is of the NVIDIA data, but it definitely isn't such that they can support it. Then at first glance, in my opinion, this movement, we'll see the developments later, as always. By now, I think you've understood that I don't like making long-term predictions, but I do like looking at what I have in front of me at the moment. Well, the market is telling us up. So let's take advantage of these front hands. Now let's move on to the other two American indices. So let's take a look at the Dow Jones. Here too, the situation is similar. We are working above yesterday's BCT levels. And well, we appreciate it. Well, it's a nice resistance zone. Thank you for the Dow Jones though. So here too, the chances that it might pull back along with the other two. So I see the Nasdaq and DES. That's having a greater outlook. Well, I see it as better. The Russell should be the one. So according to what we've said, it should be the one to benefit the most. But so here too, the situation for the Dow Jones is that we are currently working upwards, or rather more than just upwards. It's a recovery attempt, so we'll see. If we will test these areas, because these are important zones, then the R2 zone, which also corresponds to the first weekly resistance a little higher. So this is definitely the area to evaluate for an attack, then at the extreme maximums of daily targets, which could easily be reached given the data that will be released in the early afternoon. If they happen to be particularly positive, obviously the market will be able to read them positively. We were talking about the Russell. Let's take a look at it. Here it is, Russell. So even yesterday, you see it held up. Well, it got a bit messy. But in short, the volatility of the Russell is even greater than that of the Nasdaq. So those who trade it well know how it works. And here too, well, you see the area I've been monitoring is always the RD2 zone, because that's where, well, the market structure comes from. In short, it's attacking the highs, and therefore a change in the environment that comes from sideways, a bearish sideways trend, which at this moment could also lead to attacks on the weekly highs that we see up there. Let's take a look at the DAX, which we might often overlook. That is also suffering a bit from this situation, obviously, of rates. This was the decline yesterday after Trump's press conference where he announced the tariffs. You see, well, it's still working underneath, and now it's continuing to do so since this morning. So we are bounced precisely on SD2 this morning. About 20 minutes ago, down to SD1. But, well, it almost looks like a Renko chart to me, considering how reduced it is. It should be obvious. In short, the movement that is about to happen is also affecting him. As a result, probably because of these tariffs and these new scenarios that will need to be processed by market operators. So with a rebalancing and repositioning of portfolios, because you'll understand that all these changes and all these tariffs, these new scenarios obviously lead to inevitable portfolio changes. Okay, now let's take a look at the commodities, starting with oil. There has been a contract change for everything, for the metals, also for gas. Later, we'll also take a look at copper. To copper. So oil, as we said, continues this wave of correction. As a result, the agreements are now imminent for the end of this war. In Ukraine, we've said this and I reiterate it, will definitely lead to a decrease of the gods of energy costs. So with a benefit, in short, both for the population and for the companies, certainly in short. They will benefit from an operational standpoint. So at the moment, we're in the opening range. I'm expecting a possible test even before reaching the peak area, before maybe being able to give a bearish push though. So as always, we're right on the edge. We're actually inside the range given to us from the BC3 levels. So as long as we're in this range, we'll probably work this range with a particular focus, Harvey. If it's the key level, of the day, for all assets, the HV level is always the key level to monitor. Let's move on now. Go to A. So, okay, during the night, there was a bit of a pullback. We are at the lows, even if, at the level of weekly lows, if, they should be broken, that the minimum range of updates. I was obviously going to publish them promptly, but for now we are still in it. So let's not get ahead of ourselves before it breaks. At the moment, the price has bounced exactly at the weekly level of support, VIX-XX1. It's bouncing a little bit. VIX-X1 support. It's bouncing a little bit. Let's say we're working within that range we already mentioned. Let's increase the time frame a bit. Otherwise, we won't be able to catch everything at the 15-minute mark. Here it is, the range we mentioned between 3,000 and 2880, 2890. I think we mentioned it the day before yesterday in the morning briefing. So this could essentially be a buying area for the highs of the range. Obviously, if this range is broken, then we could definitely go for it. It's probably Matpadapito's short. At the beginning of the contract, 2790. Of course, not in one day, guys. So monitor this area from which they can attempt long positions for the highs of the range. Maybe not in one day, as always, but perhaps in a multi-day trade. Dynamically managed with stop, with trailing, stop in short, where the price should move. In favor of the management, in short, at the moment it seems like this, in short. It seems to have reacted in this area, so exactly, the same point. We'll say it could be a good trade. Okay, so that's it for them. I think I've told you everything for today. We'll obviously see each other later in the chat. As always, I invite you to not... I wanted to take a look to go on copper as a result of the contract change and of the of Nvidia's quarterly report. As you know, it's very much tied to copper production. As for artificial intelligence, copper is a fundamental element for all production. And let's say we're going to take a look at the Yuan Hao chart. Right now, it seems to be outlining almost a bearish head and shoulders pattern to keep an eye on. Let's say that this shoulder here should be a bit higher than the left one to fully configure. Obviously, then we'll have a neckline, in this area here that's a bit slanted. That should go like this. Let's draw a trend line, but of course it's all information. This could be a consequence, also probably a little bit of the disappointment given by envy in quotation marks. Disappointment because the data was good as usual, but the markets always want to be surprised. It was, let's say, within expectations, Nvidia's good results. And this, let's say in quotes, it seems to have disappointed a bit the market, because the markets always expect to be surprised. So we need to focus on this thing, which is a bit, baggy, changing in certain aspects, at least in my opinion. We'll see if everything will then be confirmed by the price movements and what will happen with this. Well, I'll say goodbye for now. We'll catch up later in the chat. As always, I invite you to follow me on social media. So on Patreon, X, and on YouTube. As always, leave a like because it helps to index the page. And so, to increase, our visibility. And again, thank you. We'll talk later in the chat.